Sorry about that. Alright, so pretty boring, typical, I don't want to say boring, but pretty typical day. So, as you can see, we've been rallying up, kind of forming a wedge, we've been channeling. Really, if you want to call it a spike channel, you can, spike, channel, nested. Here's another spike in the channel. We're starting, you can call it a trend line break. We're starting to go sideways. Really, though, what's going on is the daily chart. And as I just said here, spike, channeling. Here's the real importance. So we have all of these resistance levels up above. So we have, here's the December 29th high, the December 2nd high, November the 3rd high, and this green line is the all-time high. And we have a measured move from, you call it this double top or this double bottom neckline. So the real question is, are we going to break above the all-time high? And, one of the issues today brought was, so we've been going sideways. We finally got a breakout above the December 29th, above this trading range area, right here. But, in a trading range, we got a decent breakout bar. Not great, but it is a breakout of this high. Look at the follow through. I mean, literally, I just noticed that we did not even have a one tick. We closed exactly at the open. Let me just make sure that's correct. Yeah, we literally closed. No, that's not right. Huh. That's weird. So on the 5-minute chart, it shows that we have a 2-tick body, and on the daily chart, it shows we closed at 76.50. Interesting. It doesn't, either way, it doesn't matter. It's disappointing follow through. The bulls needed, something like this, breakout, another bull bar, but we got confusion. Confusion equals trading range. So just something to think about, But really, you don't have to know all that. It helps, but you don't have to know all that to trade 5-minute chart, So let's look at the open. Bar 1 is a 1-tick body. It's a 1-tick bear body. You can call it a failed breakout of this, this top, failed breakout of yesterday's high. It's really not that important. To me, all this says was bears sold the high and were a scalp. They sold the high at 77 and price came down to 75.50. Regardless, since we closed at 76.25, I'm going to assume we dipped 2 ticks lower and the bears made a profit. Besides that, look at, what do we notice with this low and this high? Bulls made money. They bought the low of 835, 75.50. Price went down to 73.75. So enough to buy 1 point lower and price turned up. So, and yeah, also bears made a 1 point scalp selling below, but I would never do that. So bulls made money as the market's falling. Usually a sign of a trading range. So look right here, we have a bear breakout, but bad signal bar. So far a 4-bar type trading range, really a 10-bar type trading range. Where's the follow through? It's similar to this. We had a breakout, but not a breakout of the low. So really, this is the breakout. This was the follow through. So it's a reasonable short, but the bears who sell this are going to be very leery and very quick to get out. Look what happened. We got a doji. Disappointment, and confusion. is the hallmark of a trading range. And look what happened here. Could not fall below. Bears bought the close. Price turned down, turned up. So I personally, I think bears have to get out here. Reason being, trading range day probably, disappointment. Notice what happened at the low. Here's the close, 72.50. This low is 72.25. That means price went one tick below this close and turned up. Therefore, there were more buyers at the prior close and not sellers. Hallmark of trading range. And then we tested up. And one thing that's fascinating to me, bears, some bulls would sell this close, put their stop one tick above this bar. Same with here, they'll sell this close, put their stop one tick above this bar, and price stopped them out. I'm going to go ahead and get rid of that for a minute. Price, it stopped them out during this bar and turned down. Well, that's a skunk trade. Really, it's not a great short. I think you have to get out by the time you're up here. But here's the thing. This is the way I see it. If I sold this close, I'd probably sell more at this high and get out right here, or I would sell more below this bar. I probably wouldn't even do that, to be honest. I'd probably still sell that high. It's just too, I'm shorting when the bears have only made one tick, selling below in this tight of a channel, although it's doji is just not a good idea. So you can see, we went one tick. Look at this low, 74.50. Look at this low, 74.25. We went one tick below to let break even bears out of the market. So far, look, we're an hour into the day, and the close is 75.50. The open is 77.50. Lots of dojis, lots of trading range behavior. Very dangerous market. Very dangerous market. Although we're always in long, it's a trading range. 50% pullback. We fell below this low. We turned up, and that's just it. Look at every breakout. Bulls tried to buy this close. It took them quite some time to actually make money. Maybe they could have scaled. They could have scaled at one point lower and gotten out break even. But bears are making money above bars, and that's an issue. They sold this high, made money here. So they sell here, scale in, make money. They sell these highs, make money. Here, at some point during this rally, since bears are making money, you're getting it, you can call it a wedge, 1, 2, 3, and then double top, breakout, and another wedge, or you can just say, or you can say we have a double top, here to here, full breakout, 3 more pushes. It's kind of a low 5 short. You can call it a low 6, low 5. It doesn't matter. All that means is that we tried to form a top, 1, 2, 3, or, basically we tried to form a wedge top. We broke above the wedge. We broke above the wedge, and now we're trying to stabilize again. So it's arguably 1, 2, and 3. So at some point, the question becomes, okay, here's the open of the day. In other words, I'll sell I'll sell 4 points above the open of the day, which is basically somewhere up here. If you want to get technical, the open of the day is 76.50, so you sell at 80.50 during this bar, and you put your stop 4 points higher and set a target at the open. Why? Because that's what trading ranges do. Look what happened here. Trading ranges, they fall below obvious support, fall below obvious resistance, and they just never, most breakouts fail. And if you accept that there's going to be disappointment, you're going to be much happier trading a day like today. Just like here, just like this, when you think it's a trading range, just, you have to be suspicious. And if you're a swing trader, it's almost better to miss breakouts than to say, oh, we're going to bear breakout, we're going to bull breakout, we're going to bull breakout. Yes, you could buy here and manage the trade correctly and make money, but it's difficult. There's not a lot to be made on a swing trading day like today. It's just not. And I wouldn't worry about days like today. What I would worry about is not losing a lot of money. Look at this week. Even if you didn't do hardly anything on a day like today, or much on yesterday, look at this day. Here, strong breakout, follow through, just buy. Just do that. You buy right here, set a target up here, you make money. Or you can say, okay, double top, I'll buy, and I'll buy here, set a target up here, make money. Even on these kind of days, even like today, one thing you can do, something I really like paying attention to, low of the day open, projecting up. A lot of times the market will move in equal distance as it moved down in the opposite direction. So it creates basically an open in the exact middle of the day, which is exactly where we closed. Sell up here. Say, okay, the low of the open projects up to 81.25. I'm going to sell 2 ticks below at 80.75. And I'm going to set a target at the open. And maybe I'll risk 3 points above. That's a perfectly logical way, That's a perfectly reasonable thing to do. The biggest issue with the day like today is, as we're going up, traders are getting more and more interested in selling. As we're going down, traders are looking more and more to sell. The other thing is, we fall below obvious support and obvious resistance. Look right here. Put a stop here, you're going to get stopped out, and there's going to be buyers. So bulls will buy this, they'll buy more lower. Scaling, I would not buy here because I think we're going to get to the open of the day, so why do that? Here. Wouldn't put a stop down here. If I was a bull, if I'm long, which I would hope I would not be long after this trading range day. It's kind of like this right here. It's the same example I talked about yesterday. If I'm long up here, I'm not going to get out at this low. If anything, I'm going to keep a stop down here, maybe here, and buy more lower. That is why the math's pretty good if you're willing to exit down here. Take this. So, let's say, okay, here's the open of the day. This green line, which is currently red, here's the open of the day. If I can make it green, there we go. Here's the open of the day. We just touched the open of the day. And now you can say, gee, we're getting a wedge. First push, second push, third. I'm going to buy above it. Well, stop entries are not great on the trading range day second. This makes me suspicious. We're turning up right, we hit support, tight channel. Arguably we need a trend line break of the channel. I'm not going to draw it. Y'all understand that. We need a trend line break of the channel and a retest down. But do we have to fall below obvious support? We have an obvious breakout, which we know there will be buyers down here. They will buy this low. So my question is, a couple things. This right here, bulls bought this close that maybe they didn't get out at break even. Maybe they bought more above here. I would not buy that. I would say, gee, I'm going to try and buy somewhere down here. So we rallied up and we're turning down. Now look, this is real interesting. We fell below this low, fell below this low. Here's, there's an extreme importance in not buying too low, not selling low and buying high. If you buy high and sell low, you will lose money on a day like today. You will just get slaughtered. There's no way about it. If you can manage to stop buying high or buying at resistance and selling it for support, you will, your trading will become so much better. So, think about the math here. Let's say, let's take this trade right here. Let's say, okay, I'm going to, yeah, we may fall. I think we'll fall below this because we're probably going to test this, somewhere in here. So I'll just buy this low, and I'll put a stop maybe down here. I'll just put it at the low of the day, and I'm going to set a target up here. Well, That's really good math. You're buying at support and selling at resistance. Personally, if the market went 2 ticks below or 3 ticks below and just started turning up, I would take profits at least some at 2 points. If you're just trading one contract, just say, hey, it's a gift. I'm gonna get out at 2 points, maybe 3 points if I can. So yeah, biggest thing: do not sell low and do not buy high. Until you think it's a strong trend, until you see, even this is another example. These by the way, I forgot to mention yesterday, these bodies are getting smaller, which really increase the chances of a deep pullback. Same with these. Look at these breakouts. Breakout, bad follow through. Breakout, bad follow through. 2 bars. Here's a breakout, bad follow through, disappointment. Breakout, bad follow through. Breakout, follow through. So we'll probably, we may go for a measured move. More realistically, we'll get to the open of the day most likely. Disappointment. Buyers below. Breakout, bad follow through. Breakout, bad follow through. Breakout, bad follow through. Wait until, if you really want to swing, wait for something like this, or even here. 17 bar micro channel, bears are getting a lot of bodies, and then boom, we sold off. So wait for something like that. Alright, that's all the time I have. Can't make a video tomorrow because I'll be unavailable. So yeah, comment below if you have any questions. Thank you.